Here's the difference between a $100,000 investment in stocks versus real estate. So let's start with stocks. If you had $100,000, typically investors see anywhere between 8 to 12% when putting their money in the market. After 10 years, your money would compound up to $215,000 all the way to $310,000. Now for real estate, if you use leverage and use the $100,000 to buy multiple properties, you could buy 5 properties that are each $100,000 and put 20% down, so you're putting $20,000 in each property. And that also means that you have $500,000 in controlled assets, and if each of those $100,000 rental properties are making $250 per month in net cash flow, that means you're going to see a total of $1,250 per month in net cash flow. And if you assume a 3% appreciation after 10 years, you'll be able to see about $150,000 in net cash flow. And with a 3% appreciation, you'll have about $270,000 in equity. And when you add it together, that's $420,000 after 10 years. And for equity, I didn't even include principal paydown and any tax advantages that you get from real estate.